following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Love coming out of you makes you happy. The whole world can love you, but that's not the love that'll make you happy. What will make you happy is to share all the love you have inside of you. That is the love that'll make the difference. Market-wise, let's take a look at it out here. We have the Dow Industrials up 133. NASDAQ is down 52. S&Ps are up $1.50. Gold contract down 370, trading at $12.78 an ounce. Silver down 13 cents, $16.37 an ounce. Copper flat, $3.06 a pound. Light sweet crude down 95 cents, $57.40 a barrel. Notes, 10-year note down 5 ticks, 124.08. 30-year bond down 5 ticks, 153.03. King dollar up 318 ticks, trading 92.859. The euro is trading at 118.5 to the U.S. dollar. The yen is at 112.5 to the U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do we have out here? We've had some volatility out here in spades, and the S&P has given it up in the spades. We're going to take a look at that future. What you're going to see inside the future is this. S&P this morning, we hit a high of 26.65. We're at 26.47 right now. Bottom line, I expect as we come into this close, the bulls and bears are going to fight it out, no doubt, to basically keep this up in a positive area. What we just did is we got to 26.45. Now, when this gapped up higher today, it started out Sunday night at this 26.44. So the 26.44 is a big number. That being said, what you also have is this. You have a high volume low from Friday that's laying out there that'll get tested at 26.17. If we go over to the NQs and we take a look at the NQs, what you're going to see inside the NQs is the same type of setup. The difference is that the NQs gave it up right from the get-go. First leg down on the NQs, we started out at 63.91. It's already given up 100 points. You're down 55 from that. And guess what? In the NQs, you also have this high volume low at 62.46. So we've hit 62.75 thus far. That baby also is going to get tested. Russell 2000, let's go look at the IWM. IWM also gave it up. IWM got to a high out here today, 155.41. You're at 153.19. So we'll see how this baby's shaking out. They all have high volume lows from Friday. 148.78. Right now you're at 153.20. We're going to take a look at the gold contract. Gold contract out here this morning. We are on the February contract, 2018. You got to love it, man. Pretty amazing, actually. So gold contract traded to a low today of 1273. High of 1280. You've done 241,000 contracts. Bottom line, you tested the lows again. You have lighter volume. Bottom line, I want to get out of this lower end of the range because this lower end of the range, we've been in for quite a while. We've been in this lower end of the range since October 3rd. Hasn't broken the range yet, but guess what? When you stay at the lower end, it gets dangerous, particularly because when we look at the silver market, the silver broke down on Friday. Actually, it broke down on Wednesday, I believe. Let me look at this again. We're at 1637. Yeah, it broke down on the Wednesday. Thursday it actually broke. The number we're talking about is like 1667. Right now you're at 1637. It's coming into the swing low from August of 2017, but bottom line, you're in a different range. So you want to see it get back inside the 1667 if you do happen to be a bull in that metal market. Notes and bonds. Let's go to the note market first. So 10-year note, bottom line, wants higher price. It's pretty amazing. We're just watching this whole thing shake out. Let me actually put this up because I believe we're on the H contracts now. Yeah, we are. Okay, TYH. This is pretty wild just how we're rolling over to the 2018 contracts. So we're at 124.08. We've done 1.2 million contracts. Bottom line, Friday you did 3 million contracts. Going into the swing point, this wants higher price, lower yield. 30-year, same type of setup inside the 30-year. 30-year, we USH. I gotta get used to putting that 8 behind the number instead of the 7. So the 30-year already broke the swing. The swing we're talking about is October. 152.26. You're at 153.03. And that puts game on for 156.18, which is the September 8th high. So percentage-wise, where we're at right now in the 10-year, excuse me, folks, we're at 2.376. And if we do take a look at that and put that on a 6-month basis, that is at the higher end for the last 6 months. If we put that at the year, we're right smack in the middle again. The low is 2.03. The high is 2.62. King dollar. What do we got with King dollar? King dollar out here it looks that it has a couple different ABC structures, both down. And he has a small ABC structure that's been playing with that number, the 92.13, 92.130 is the low of November 27th. The larger one is a monster, folks. The larger one goes right back to January, and we'll see how this plays out over the next 6 months to a year. But this is about as weak as you can get. The larger one starts at 103.81, which was the first week of January, going all the way down, straight down to September's low, 90.990. This larger one has a price projection into the 82 area. So the support at 89 and 88. That's from the highs of 2008, 2010. But the projection is into 82, so big number. You stay right there, folks. We'll be coming right back. Dow Industrials right now are up 130. NASDAQ is down 50. S&Ps are up 1.5. Coming right back. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow Industrials right now are up 130. You get the Nasdaq down 51. S&Ps are up 2. Let's go over to our man, Mr. Steve Rhodes, as we do each and every Monday at 20 past the first hour. Don't forget, folks, Steve's got a great show right here every trading day, 1 to 2 Eastern Standard Time. And no matter where you're listening right now, remember that you can get us 24 hours a day right on your cell phone. You go to TFNN.com. You hit Tiger TV. Now, as you're coming over to TFNN, you can also test drive Steve's newsletter, Mastering Probability, 30 days absolutely free. The way you do that, you go to TFNN, go to newsletters, go to trading newsletters, test drive it 30 days absolutely free. Steve Rhodes, what's going on?
I am struggling to put in the 8, or in this case here, the 18 is what I have to put into all of my futures contracts.
I know. 18, isn't that a trip? There's no doubt, man. It's heavy.
Yeah. I'll give you an even bigger trip. These next 2 weekends are our only free weekend before we get to Christmas.
Yeah.
I mean, it's, boom,
it's
boom,
here.
Boom.
It's here.
Yeah.
Ho, ho, ho.
Absolutely. So let's take a look at maybe a little bit of a longer-term view as to what may happen. I don't know if you caught the Carol Burnett 50th anniversary show, but these charts here, we're going to take a look at the 13th anniversary repatriation bill show. And so with the Senate passing the tax bill on Saturday morning, what we do have is we at least can go back to 13 years ago, 2004, which was the last time that Congress passed a repatriation bill. And we can take a look at what was going on inside of the S&P 500 for those folks that aren't familiar. Back in 2004, Congress created the American Jobs Creation Act, which was in essence, a repatriation of $350 billion. As you know, and many people know, really didn't create that many jobs, but what it did do, and what I'm interested in, at least in speaking to everybody that's watching or listening, is what were the impacts inside of the stock market? What can we learn from the past? So on this chart here for the S&P 500, the yellow boxed-in area shows from the time that the bill was introduced, which was on June 4th, 2004, to the time that it was signed into legislation, to when the market actually went ahead and made its all-time high. And during this time period, from June of 2004, the market continued to rise without any type of correction. When I say correction, I'm referring to 10% or more. There certainly were retracements or pullbacks in the market, the largest of which was 8%. And that went on for 153 weeks, basically 3 years. And in fact, from the point in time from its last prior correction, something over 10%, which was in 2003, it was 4.4 years without any type of retracement greater than 8% out there. What a trip! So that's how the S&P dealt with the so-called American Jobs Creation Act. Now, that was $350 billion out there. Today, what we're talking about, and this was as of December 2016, we're talking about a figure like $2.5 trillion. So substantially more than that 315 billion level. The last time, Tom, that you and I saw and this is taking a look at the S&P 500, any type of retracement or correction, if we call it, of more than 10% was back in 2016, back in February of 2016. And the green arrows that are on my chart here are just identifying when the House actually passed the bill, the Senate passing the bill, and if we take that out 3 years, or if I go from the last time that we saw a correction, something more than 10% back in February 2016, this says if the S&P 500 is going to replicate what it did last time, we go all the way out to June of 2020 before there's anything more than any type of significant pullback inside of the market. So I think that this is what people should try to wrap their head around as price continues to move higher, and these repatriation, these funds are potentially they're being used for either dividend, a number of different factors, but certainly dividends and stock buybacks out here. And that's why we have never really seen substantial corrections in the market. One of the reasons why we haven't. If we take a look at now, there's a lot of folks that will say, well, hold on a minute here, Steve. You've got interest rates that are rising. The Fed is raising interest rates. And see, we can go back to 2004 as well. So during the same period of time when we saw repatriation back then, that was also when the Federal Reserve was raising interest rates. So we had short-term interest rates moving up back in 2004. We also had the S&P 500 moving up. We've seen interest rates this year moving up, in fact, since 2015, and we've seen our S&P 500 move up. So the correlation there that if interest rates are rising, it's going to impact the market, and that's going to top it out. That's not what we saw last time. And that chart there that we looked at was a weekly chart, so you don't see the bumps along the way. This is the daily time frame chart, and here we had the Federal Reserve raising rates nearly every meeting, and yet the S&P 500 was able to go up by 12% during that same time frame. So it's odd, or maybe not. It's a coincidence, or maybe not, that we have interest rates that are going to be rising, and we have repatriation that is also going to be going on. So the same type of outcome certainly is in place to occur out here. Now, today, the S&P 500 is struggling a bit after the gap open last night. And it should be struggling a bit, as this chart here, which shows all of our horizontal trading range boundary lines. These are the tools that Bud Rolfs had really created for us, and these horizontal lines identify levels of resistance at the top as price is moving, as well as support. If you pass through one area, old resistance should become new support. So the key level here that the S&P 500 is trying to get over is 2640. 2639.83 is the number that's on my screen out here. If, in fact, we see the S&P 500 move above this level, as it should, because December has a very positive bias, then what the S&P will target longer term is the 2778 level. To help us kind of back that up overall with regard to the market, as I like to take a look at it, Tom, I like to look at the New York Stock Exchange. And as we speak right now, at this point in time in the afternoon, the New York Stock Exchange from a breadth standpoint is very healthy. And the reason I say very healthy is we are at a new all-time high in the advanced decline line, and we are at a new all-time high in the volume advanced decline, which really the summation line as I've got on my screen out here. The New York Stock Exchange, only one time that I've been able to find, has ever made any kind of significant top when these two are at new all-time highs. Typically, any kind of top is put off by about 3 months or so. So things look healthy. And with regard to the Dow is a top performer today. And this chart here, I think, says it all. Because what we have going on around the world in every major currency, when I say major currency, I'm referring to euros, yen, and the Great British Pound, the Dow is above the prior swing points in each of those currencies. So there's money around the world that is pouring into the Dow, and it too should continue higher. So that's my outlook as to what's going to happen over time with the repatriation as well as just everything else that I look at.
That bull is running.
The bull is here. December's a good month.
Come over to our website, folks, at TFNN. You go to newsletters. You go to trading newsletters. Can test drive market probability right here, right now. 30 days absolutely free. Don't forget, every trading day, 1 to 2 Eastern Standard Time. Thanks, Steve. Have a great one. Have a safe one.
You too, Tom.
Stay right there, folks. Coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. Dow right now is up $1.23. You get the Nasdaq down 54. S&Ps are up 1, and they're ready to go negative right now. So this is going to get interesting because we're dealing with, we're dealing with 30 minutes coming into the close to see exactly where this good old Dow Industrials are going to go. ESZ. So when we go into the S&Ps, 1 second, sorry about that. Still dealing with this number, let's see, ESZ7. Okay, so, yeah, it's teetering right here. So the breakdown, we're at 2646. The 2644 is the number. We've hit it. We've just hit it twice, actually. Yeah, we just hit 2644.50. It's going to be 2644 though. If we break 2644 in the next 10, 15 minutes, then you're going to see that get into about the 36 in about a heartbeat, which is going to be pretty intriguing. Just watching how this whole thing will shake out. If we look at the Dow Industrials, the strength inside the Dow Industrials right now, point-wise, what you have is that Boeing is putting 57 positive points into it. Disney 37. Home Depot 34, JP Morgan 16, Goldman 15, IBM 12. United Health is taking out 28. You have Microsoft taking out 22, Visa's taking off 20, McDonald's is taking out 13. Inside the NDX 100, that is getting, it's really intriguing. When they take these NDX stocks apart, man, they take them apart. You get Align Technology, which is the Envision system. That's down 9.2% or $23. And this thing, you know, this has been a rocket ship. You go back 6 months, the stock was at 142. You go back 6 days, the stock was at 266. Right now, you're at 230. That is the leader in the NDX 100 on the way down. Intuitive Surgical is off 6.5%. You get PayPal down 6%. You got Adobe down 5.6%. If we go over to Adobe, that had led the market lower last week. Adobe looks like it's going to be an ABC structure on the way down. No, it's not going to be enough volume. But Adobe 5 days ago was at 186. You're at 169. You're going after the gap, which is 164. So you have the bottom of the gap being 164. Once it's into 164, get out of the way because 153 is going to be coming at you. This is a big number. NVIDIA, NVDA, this is following up on the way down. NVIDIA is down $11.14. That is going, we're at 186. 184, no, 180. 180.11 is the next stop. And if we pull this back a bit, yeah, you're going to have volume off the highs too. So this is when NVIDIA starts moving, LRCX, what you want to make sure you know of that leads those chip stocks and it leads them down fast and furious. Lam Research is down $7. This in 5 days is from 219 to 180. This is getting smoked. In 5 days, this just came back to trading from the 27th of September. This also has monster volume off the highs, so this is going to be a little problem in paradise. And you know, when you look at this, you can make the case. Yeah, let's put this up. So this is where you want to be aware of that when equities haven't retraced. When they do retrace, you can just get a 0.382 retracement, and it's vicious. So this equity really hadn't done a retracement since February of 2016. So a normal retracement in a bull market is 159, and you're at 180. And a normal market, it's 140. And it's because of the extension of the move. The extension of this move has been pretty amazing. That being said, guess what? You get volume off the high, it is trouble in paradise, folks. Volume off the high. And those chip stocks have volume coming off their highs. Go take a look at the, let's go to Google, see what we have with the rest of these fangs. Google's down $11. Google's in its gap, man. 972 is game. Right now you're at 999. Got into the gap. As soon as it got into that, which it got into it on Friday, saved itself on Friday, it came right after it again, and it's coming after it with volume. So the top of the gap on Google is 1,008. We started out today at 1,012, took it out, going right after it. Facebook, let's go take a look at Facebook. Excuse me, folks. Facebook is down $3. Your Facebook is actually back trading where it was in July. So this is a big consolidation. Broke lower in the consolidation, broke inside the trading range again, which sets up the bottom of the range, which is 161.56. You know, Facebook had broken topside on the 27th of October, broke topside with 30 million, broke down with 41. That says you're going after the 161 area. Microsoft, let's take a look at Microsoft. Microsoft, also look at that, man. They're hitting them all. They're getting out of these tech stocks, folks, like in an incredible way. Microsoft is down with 28 million today, bigger volume than we had. Right in this gap, we game now is 79.42. This is a big number, man. This is, let me put this back. Okay, we'll see how we hit that 79, 78 area. But the bottom line is that the FANGs, they're selling them like crazy. The way the market is trading right now, too, the Dow more than likely will be able to, well, right now the Dow's up 105. You get the NASDAQ down 65. S&Ps have just, they're teetering on giving it up. Let me see where they are. That 60, yeah, it broke it. Okay, so watch how this shakes out. So we got under the 64, 44, 75. That's the number. Let me pull this a little bit closer and see if we get any volume here. So intraday, we got, let's see, you get 7 minutes into the trade. Yeah, you get volume too. Okay, so this is the bar. You stay under this for another 3 minutes, then it's going to be 63.33, 63.34 coming into the close. Because what you're doing here is that you're breaking lower, you're getting price spread, you get an acceleration of volume. Bottom line, your next lowest swing point is that that's sticking out there from 3 o'clock in the afternoon on Friday. And then, of course, what you have, you get that high volume low that more than likely, let me just go back to the NASDAQ for a second, because the NASDAQ is getting really close to it. The NQs are. Yeah, we're right next to it. So the NASDAQ right now, the NQs are down 75. We're at 62.69, and it's 62.46. Sounds like a lot, but it's not, because the NASDAQ is already down over 100 and, from highs to lows today, the NASDAQ's already down 120 points. Another 20 points is not going to be a lot of money, a lot of points either, coming into the close out here. Some of the higher volume stocks that we have out here, let's see what we're looking at. Bank of America is up 87 cents. You got Micron down 2. CVS Health is down 360. Microsoft, that's a big one, down 370. General Cable, look at that baby. That's up 760. So let's see what's going on with General Cable. General Cable Corporation. Design, develop, market, distribute copper, aluminum. You stay right there, folks. We'll be coming right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is up 89. You get the Nasdaq down 3. S&Ps right now, you get the Nasdaq down 69. S&Ps are off 2.5. If we do go over to Disney, you're going to see Disney right now is trading up $5.41 at $110. What that's all about, folks, is that let's see what Fox has to say. So 21st Century Fox, the global film and TV company controlled by the Murdoch family, would prefer to sell some assets to Walt Disney because it's a better strategic fit and presents fewer regulatory hurdles. People familiar with the matter said the family is holding talks with Disney as well as Comcast about combining certain media businesses with the potential buyers. The assets would include a 20th Century Fox film and TV studio, Fox's stake in the UK pay provider Sky PLC. That's interesting that because Murdoch, man, that was one of his first ones, Sky PLC. It's interesting that they're pushing that out too. They don't include Fox News, Fox Broadcast Network, or the Fox Sports Channel. The deal would open the door for James Murdoch, the Fox chief executive officer, to join Disney. The Murdochs aim to make a decision by the end of the year. People said whether they pursue this transaction will depend on the price and structure. The Murdochs, Robert Murdoch, 86, and his sons James and Lachlan, are considering a sale as the market values of the group below slower. Well, the market values the group below slower growing peers. Bottom line is that, so with Disney there, what you have, folks, is that it's the film library. That's the bottom line. And then Sky TV, the Sky's interesting part of that thing. The film group I can see in about a heartbeat, though, no doubt about that. Let's go over and we take a look at Apple. Apple out here, it's the only one we didn't look at when we look at all those FANG stocks. Now, Apple's really flat. It's down 86 cents. Still couldn't hold value, though. Apple has that high volume low from last week before the downdraft on Friday. That's 167.16. Let's go over to the financials, the XLF. XLF out here, that gapped higher this morning. We gapped up $28.20. You're at 28.05. And the one to keep your eye on here, folks, because it looks like it's going to be another failure, is going to be good old Goldman Sachs. Now, it's over. The number on Goldman, I believe, is 250.70. Let me bring this back. What that is that Goldman on the monthly basis, it is 250.70. So that's the number you want to keep your eye on. We're 250.89 right now. We made it to 254.90. And the reason I'm saying that's the number to keep your eye on is this. 2007, last month on Thursday, it tested it finally tested it. Took approximately, it took, oh my God, it took 10 years. That's a mind blower that was 10 years ago. Anyway, it took 10 years. The test was on the monthly. It failed on the monthly on price and volume. We did 54.3 million. Going into 227 million, it closed underneath it. So that number, that 257, 72, is going to be a number you want to watch real closely all month long, because you can trade around that number. We go take a look at the XAU, the HUI inside the gold business. Both of those, no bid. We need a bid in both of those babies. The XAU right now is down at 92 cents. Now, they both happen to be trading into their December swing point, and they're trading in with a lot lighter volume. The problem is, of course, is that they've been trading at the lower end of this range since October of 2016. It's a big number. I don't expect you're going to blow that number away, meaning because of the fact that there's so much volume down there. But guess what? The longer that they actually stay down there, the higher the probability is that they're going to test it. And that is further down than we are right now. Because right now, if we take a look at the, okay, I can't bring it back. If we look at the Gold Bugs Index, what you're going to see, that's down 288. And we're dealing with December, 1 second, let me get that. Put this up. Okay, so you're dealing with, yeah, it's the same number. The low of December 16th has to be 160. Right now we're at 182.91. Now the high of that is 185. So this thing is getting in a danger point period. Yeah, the next lowest swing point is 177.41. We go take a, now the way that the way that the dollar is trading and the way that the notes and bonds are trading are saying that they might, well, the probability that they go up on short-term rates is like 100% when you look at the Fed Fund futures rate, because the next meeting is on the 13th of December. Well, actually, it's 98.3 today, but I suspect they're going to go up. That being said, the way that the 10-year and the 30-year are still trading, those are still trading at the aspect that there are still more buyers in the bond market than there are sellers. So there's still a disconnect inside that market, and the disconnect is in a huge way. The 30-year, you know, has taken out the swing point, taken it out with volume, saying, guess what? Your next swing point is a lot higher. That's where it looks like it wants to go. If we go pull that 30-year and we take a look at it, what you're going to see, 30-year right now, 153.06, and game is like 156. We take a look at the actually 30-year, the rate on the 30-year. So the 10-year is 2.37, the 30-year is 2.762. Still cheap money. Still cheap money. You know, there's the differential, this is what's pretty cool though. The differential in the 10-year, right, when we look around the world, is pretty dramatic, meaning that our rate is 2.3, Canada is 1.9, the United Kingdom is 1.2, France is 0.6%, Germany's 0.3. So you can see our 10 is so much higher, right? Now, if we go to the 30s, it changes. We go to the 30s, what you're going to see, you know, we're 2.7, but the United Kingdom is at 1.8, still higher, but not as much percentage-wise as when you're talking about the 10. France is at 1.6, Germany's at 1.1. And that's where you come down to the point that a few weeks ago, what we were getting is that we were getting a flattening curve. And a flattening curve means that your 10-year is catching up with your 30-year, and then you can borrow money almost as cheap on a 30-year as you can a 10-year. The differential is like, okay. And what that's all about is that that's all about saying that there's not going to be inflation, period. Because if that 30-year smells inflation, folks, okay, you will see that thing explode. Right now, guess what? Bottom line, that 30-year is saying there's no inflation out here. There's no inflation that the 30-year can see, and you know, we'll see how far the 30-year actually can see out. As we come into that closeout here, you just had the break inside this S&P. You stay right there. We'll be coming right back. We had the Dow Industrials right now are up 80. NASDAQ is down 73. S&Ps are off 4. We're coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Basil Chapman will be hosting a full-day Master Trader class Friday, December 8th from 9 a.m. until 4:30 p.m. This live 7.5-hour online class will teach you the complete concepts of Basil's Chapman Wave trading methodology, along with a variety of indicators and charting patterns that Basil uses on a daily basis, including the concept of higher peaks and lower troughs, the importance of the peak D, buy and sell modes, sustaining rallies and declines, MACD, stochastic, moving averages, on-balance volume, and much more. Everyone that attends will also receive Basil's CD book introducing the Chapman Wave methodology, a $249 value, along with 1 month of his daily trading newsletter, The Opening Call, a $128 value. Basil will be using live charts where and when possible in the webinar to show the concepts of his trading methodology, which works on all time frames. For all the details and to reserve your spot today, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is up 67. You get the NASDAQ down 74. S&Ps are off 4.5. Let's go over and take a look at Bitcoin. So Bitcoin, folks, is going to have big action come this Sunday night. Why Sunday night? Because the CBOE is going to start trading futures on them, and Bitcoin right now hits all-time highs. Actually, is trading at all-time highs, of $20 off its highs as we're coming into the U.S. market close, not of Bitcoin, just of our own markets. Right now, we're 11,524. So what you will see Sunday night, we're going to see some big action inside Bitcoin, the buying and selling of it. I suspect what we're going to see is the volatility. First few days are going to be pretty heavy. And then what you're going to see is that you're going to see what the price discovery actually is when you can buy and sell, meaning that you can go short and you can go long. What's also going to happen, I was bringing this up this morning, is, you know, the way the Bitcoin works is that there's only so many coins. The difference now is going to be as soon as you go on the futures market, you have a derivative. Guess what? Now there's as many coins as there are derivatives. And guess what? There's as many as people buy, as many as people sell. So that's going to change the game. And I expect the volatility to be out there, and we'll see where the price settles in. The margins are going to be approximately 32% of the price of Bitcoin at that time, because when you do look at that chart, they have moved 32% in a day, 30%, 27% in a day. So that's where that's going to shake out. It's not going to trade over the weekend. You know, so time-wise, it's going to be kind of, well, it's going to be more than the NYSE, but it's going to be less than 7 days a week. So action is going to be everywhere. And if you are in the Bitcoin trust, folks, you got to be really careful. The reason being is that the Bitcoin trust is trading at $1,800. That has a 92% premium, and I suspect that premium is going to go away. Why? Because the futures will hedge off it. Stay right there, folks. Come right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester. Hey, Marty, what's going on?
Hi, Mr. O'Brien. How are you?
I'm doing great. How you been, man?
Not bad. You know, you guys, over the time and with a few of your courses and seminars, you know, you taught me how to fish.
That's a beautiful thing, brother.
Yeah, it's true. And so what happens is I still listen all the time, and to not only you, but some of the others,
Sure.
to, you know, get an idea where the fish might be biting. As far as your services, they're a bargain. When you compare them to a certain prominent man with real estate courses at $35,000 and no contact with the lecturers afterwards at all, and you think of what you guys do for a few hundred, and you can get access and ask questions forever, you know, it's a great deal.
No, no, we appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We're here 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our 4 agreements. Serve the one you love. Once you decide to be a couple, you either serve the one you love. To serve your love to your lover, in every kiss you're there, in every touch you feel you're there to please the one you love without expecting anything back. Market-wise, let's take a look at it out here. We had the Dow Industrials up 58, Nasdaq down 72, S&P's down 5.5, gold contract down $3, trading at $12.79.30 an ounce. Silver down 13 cents, $16.37 an ounce. Copper flat, $3.06 a pound. Light sweet crude off 95 cents, trading at $57.42 a barrel. Notes, the 10-year note down 4 ticks, 124.09. 30-year bond down 2, 153.06. King dollar King dollar up 259 ticks, trading at 92.800. The euro is at 118.5 to the U.S. dollar. The yen is at 112.5 to the U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? You get failure on price, failure on volume. S&P's gap higher this morning. Dow gaps higher. Can't hold price. You got the 266.80 today in the SPY. Closed out at 264.11. If we go into the futures and we take a look at the futures, what you're going to see, futures gave up quite a few points. We got a high in today of 26.65. We're at 26.37 right now. Bottom line, gave it up in spades. Now the danger here for the S&Ps, of course, folks, is that you have the high volume swing low from Friday that hasn't been tested. That'll get tested. That's 26.17. And from where we are right now, 26.17 will be pretty easy to get. You know, we came down 27 points from the highs to the lows out here today. The NQs almost made that price point, I believe. Yeah. So the NQs came down 130 points from the high today. We had a high out here of 63.91. You're at 62.64, and your high volume swing low on the Qs is 62.46. So you're talking about only 18 points lower in order to go after that high volume low from Friday. Gold contract. What do we have with the gold contract? Gold contract out here today, and we're in the 2018 future contract right now, the February 2018 future contract. Gold got to a low of 12.73. We rejected lower price. We closed out at 12.70. Where is she? 12.79. We haven't hit the swing low of 12.68. That's the positive. The negative on this, folks, is that what you have is that we're still at the bottom of this range, and we've been at the bottom of this range. Well, we came down off the bottom of this range, off the top of the range, about 7 days ago. But bottom line, I want to get out of the bottom. The reason being, the longer that you're at the lower end of this range, the higher the probability that you'll break it, as did the silver contract. The silver contract did break the range last week, and now the silver contract's going to have to build some cars in order to get back inside the higher range. Right out here today, $16.37. That's what silver's trading at. Silver will have to get back inside 16.67 in order to be back inside the higher range. It is testing swings, but bottom line, danger when you get in when you get to a different range, which it has. Let's go take a look at the TLT. Notes and bonds, they want higher price, lower yield. TLT, same setup, folks. TLT on Friday got to $127.69, had 24 million shares traded. Blew away the swing points from November and October. Got into the swing point from September and had the juice into the swing point. Now, what that sets up a test of the September 7th high, which is 129.56. We take this and we put this on a weekly basis, and what you're going to see is that the TLT in general on the weekly basis not only looks like, you know, it's going to basically get after this 129, but it looks to me like it's going to go for the highs of July, which is 143. So if that's the case, well, what the TLT represents is that is the 20-year Treasury plus. So anything and everything that's in it, they have to have 20 years before it's expiring. Bottom line, that is saying what? That rates are still going to be going down versus going up. And the amazing part about that, of course, is that what the Fed does do is the Fed controls short-term rates, bank-to-bank red short-term rates. They're going up. The next meeting is going to be next week. It's the 13th. The probability inside the Fed fund future rate is 98.3. So they're saying they're going up, but guess what? The market is still buying bonds hand over fist. So right now there's still more demand than there is supply. We go take a look at some of the higher volume stocks in this marketplace out here. What you had is you had Bank of America today up 96 cents. Micron Tech was down $2. Comcast was up $1.89. CVS Health, that was down $3.43. You had Microsoft. Microsoft got hit. That was down $3.18. That's going into a gap. Wells Fargo was up $1.19. NVIDIA chip stock, that is leading the chip stocks down. That was down $11.02. You had PayPal off $4.33. You had Facebook down $3.63. We go inside that NDX 100, which bottom line, NDX 100 came off the highs once again, monster volume. You had Amazon down $28. You had Align Technology down $28. You have Intuitive Surgical down $26. Google was off 13, PayPal 12, Illumina 11, Adobe 11, Broadcom 8, Lam Research 8. Big numbers right across the board, running down those NDX 100 stocks. Looks like they want lower price. Dow Industrials finished up 58, NASDAQ down 72, S&P's off 6. Stay right there. We're coming right back. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go into the XLF, the financials. Financials out here up 42 cents. You're at $28. We go into JP Morgan first. We take a look at JP Morgan. JP Morgan went topside last Tuesday. Right now we're at 106.95, and I believe this got over everything. It did. So bottom line, we'll see how this is going to fly. It definitely, J.P. Morgan is at highs, got over all its highs. Bank of America, BAC, Bank of America up 96 cents. This is trading a different animal. Oh, baby, this is pretty wild, actually. So Bank of America, this is just trading into its 2008 lows. Not lows, but that downdraft. The beginning of that downdraft in October of 08, we started at 38 and went to 18. Bank of America actually got down to $2.53. Bank of America is going to need a lot more oomph. No two ways about that. Let's go to Berkshire Hathaway. So Berkshire Hathaway is the largest weighting structure now inside the financials. I believe this is at all-time highs, too. It is. So this is at all-time highs. What you did have out here today, it got higher, stayed up 250, gave it up somewhat in price. But I would say inside the financials out here today, inside the S&P, rather, the financials were strong. Now let's go over to the energy market. We go take a look at the XLE. The XLE got to $70.75, ended up closing at $69.65. And this gave up the swing point. So this is going to be really intriguing. And the reason being is that it was pushing into the swing and it had good volume. Thursday we did volume of 22 million. Friday did volume of 21. You took out the swing, and then when you took out the swing, you took it out with 13 versus 19 million. And we took out the swing today. So what that sets up, let's bring this back a bit, because the XLE has been a different ball game, and it has been for a long time. The XLE topped out in June of 2014. That was at 101. Goes straight down to 49, does a counter trend bounce to 78, comes down to 61 in August, and now it looks like it's another failure. Let's go to ExxonMobil and take a look at the largest weighting structure inside the XLE. That was up 11 cents. This also failed at its swing point of 84.24. Got to 84.17 today. 11 million versus 14. Chevron, second largest weighting structure. Look at that spread on Chevron. Holy cow. So 122.30. 120.84 closed that. So this seller's inside here. This is going to be really intriguing watching this thing shake out, because it seemed that the XLE, once it started pushing into there with volume that had everything going for it to blow those away. But guess what? Right off the highs of Chevron, it just can't handle price. That's how that thing is shaking out right now. That price, they sold it, and they sold it down hard. Now, what the risk is going to be here, so picture what you have here. We are at December 4th, right? It's been a great year. So your risk for sell-offs going from the NASDAQ to the S&P are going to go up pretty dramatically, and this is why. So picture what ends up happening, folks, is that you have money managers, and by the way, what's so intense about this is that this was not a window dressing event the last few days out here inside the NASDAQ. In fact, it was a window breaking event versus a window decorating event. So picture you're a money manager. You've done well. The market's up big. You haven't sold some of your NDX stocks. Well, in 2 days, let's see what we got here. So if we go to the high flyers, and the NDX was the high flyer. You go to the high flyer, and all of a sudden, in 12 hours, you're back to November 1st. And so it gives back a month. Now, they're going to be sitting there saying, okay, some of them are technical traders, most of them wouldn't be, but everyone's aware of gaps. If you're in this business for a while, you're all aware of gaps, whether they're a technical trader or not. They're going to be looking and say, okay, hold it. We just blew away the gap that we had from the 15th of November. You know, that gap there was at 62.76. We're at 62.63. They look down and say, oh, no. There's a gap at 6,000. and 66. So their question is going to be to themselves, okay, do I want to hang in here? Maybe it's just a small retracement. I've been rewarded each and every time that I've stayed in this market. So that's going to be the question that they have. The larger question, and I expect the larger question is going to be, they're looking and saying, okay, if you're one of the larger managers that have sold the NDX stocks out, you're out, you just made a bundle of money, you're in great shape, right? And that's where the rotation comes in that, you've probably heard it last week saying, oh, when the NASDAQ got sold, because they're going to rotate out and go somewhere else. Well, guess what, folks? Today it showed that they're not going anywhere else. That money was coming out of the market all day. Wasn't going into the market. People might have got sucked in at the open, for the gap open, they put it in, but the money got sucked out. So the next thing the money manager would be saying to themselves that, okay, so if the rotation's not on, is the next move on the S&P, is that going to get hit too? You start putting both of those together, what I expect you're going to see is you're going to see a little more selling here because of the fact that the reward for a money manager to stay in when they've already up this much is not probability-wise that much more. The risk of not selling when the market's been up all year, and if we get a bad 2 weeks, the client is going to say, why didn't you get me out? So when you start putting that together, the probability gets a lot higher that we're going to get some follow-through here. And we're going to find out right away, too, by the way, because what we haven't had and what we know we haven't had, you haven't had 2 or 3 days of sustained selling in this market for so long. It's pretty amazing. And, we'll find out if we're going to get it. If we go over to the VIX, what you're going to see, the VIX on Friday, it hit $14.58, closed out at 11.43, start moving higher again today. So bottom line, the VIX can get up to 1451 at about a heartbeat once again. The amazing part about that 1451 on Friday, by the way, folks, was they have 2 large VIX traders. No one knows exactly who they are, but you're talking about thousands and thousands of VIX contracts. Well, when the VIX got up to that price point on Friday, the bottom line is that one of the traders was down, on the Bloomberg article, was down $20 million on the trade. Well, what ended up happening? He was saved in a big way. That trade only ended up being down $2 million, and he rolled them right out again. So pretty incredible what can happen in one day. You stay right there, folks. We'll be coming right back. Dow Industrials closed up 58, NASDAQ down 72, S&P's off 5.5. Coming right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. Let's go inside that NDX and see who the culprits were out here today. So the leader on the way down, folks, was Align Technology. That's the dental firm. That was down 11% or $28. This is the Envision, I believe, Invisalign system, the brace system. That thing just got really smoked. I mean, it went from a price point of $257 to $225, and let's see what they had to say. You know, it's pretty wild. There wasn't any news, man. They just started dumping it. Let me go look at this for a second. So, and check this out. Someone dumped 200,000 shares on the close too. They're dumping it all day long. 225.80 at the close. 200,000 shares went south too. So pretty intense. And that's going to be a high volume off the highs now, and that's problematic. You had Intuitive Surgical down 6.7%, $26.71. That's trading $369. So they decided to take that apart too. 6 hours got you right back to October 30th, October 20th actually. So these types of moves are problematic. One of the biggest reasons they're problematic is that because we went up so fast, when you take a look at this, you're talking about decisive breaks on volume. Like when we take a look at Intuitive Surgical, had an all-time high of 405. Well, this break alone is saying that it wants to go to $314, and you're at $369 right now because it just took apart the trend line. And, you know, guess what? It hasn't retraced. If we put this, if you want to just see how a normal retracement would work. So this equity hadn't done a retracement since December of 2016. So a year. A year it hasn't retraced. I mean nothing too, okay? A normal retracement would take it to 327. That's a 0.382 retracement. Well, that's a retracement that is bullish. A normal retracement takes it to 304. So you're gonna see how when you start pulling back in markets, how dangerous it can actually get point-wise. Adobe got taken apart again. Adobe was down 6% or $11. Adobe's in tough shape. You know, Adobe came down off the highs in 5 days. Adobe's down from 186 to 168. You're going right after the gap. The bottom of the gap is 164. The gap, to fill the gap, is 153. And I expect you're going to see that filled. Why? Because when we take a look at a few of these other NDX stocks, what you're going to see is that they actually have got filled. They're going after them right now. We take a look at PayPal. PayPal, in the matter of 5 days, is from 79 to 70. That, let's see, they filled the gap yet? 67. Okay, so PayPal's into its gap. But guess what? We're into that gap with monster volume. So that's going to be toasted also. It's like, then you got to ask yourself, okay, why are they all getting toasted simultaneously? Well, guess what? Because, folks, the money's coming off the table. The money was made. And when you do look at, so for PayPal, April, PayPal was at $43. Even with the pullback, now it's at 70. It went to 79. Same type of setup. Not one, on a weekly basis, it never pulled back. Never closed below the close of the following week. So a 0.382 retracement is 65. A 5.0 retracement is 60. You can see that that turns into large problems if, in fact, folks don't pull the trigger. Google 5 days has gone from 1,062 to 998. Now Google's in its gap. You know, the top of that gap on Google was 1,008. You're under it. That just makes it that much easier. It wants to fill it, which is 987. The king dog out here, Amazon. Amazon's going after that. I was down 28 bucks. So in 5 days, Amazon just went from 12.13 to 11.33. Amazon, first off, has some pretty heavy support at 11.05. We'll see how that handles. If Amazon breaks into that level, then it's big trouble. The reason being, and eventually it will be big trouble, by the way. The reason I'm saying that is that Amazon has a gap that starts at 932. That gap, when they come out with their numbers, they come out with numbers on the 26th of October. It was trading 972. It opened the following day at 1,058. Pull this back. Amazon's got to be a big one to watch. The problem, I suspect, is going to be this, though. See, if Amazon gets into this area, you're going to see a lot more selling. Let me go to NVIDIA, NVDA, because NVIDIA, that also came down hard today. That came down 11 bucks. You broke a swing point of 191. You're at 186. We put this on a weekly. Okay, so NVIDIA, 177. 177 to 168. If you know, that's where I suspect we're going to go. If you break down at that area, then you get big trouble. And NVIDIA is the same type of setup, meaning that you put this on a monthly, actually NVIDIA is even heavier. If you put NVIDIA, folks, on a monthly basis, do you know that, let's see, yeah, that from February of 2016, it's almost hard to comprehend, it was a $24 stock, $24.75, and it just never stopped. In fact, it went up. This is a parabolic move. This went up on almost the 60-degree angle and hit $218. Now, this, let me put this, let's see, so that's a 10-year monthly. I'm going to put it on a 5-year weekly. And let's see. Now, so check this out. This is pretty sick. I wouldn't be staying in this, but what has happened is that NVIDIA, yeah, it broke the trend. Okay, it broke, but just barely. You know, see, the difference here is that with NVIDIA, this has to actually get a bit lower this week in order to basically break this uptrend that it's been in. So that's pretty intense. Let's go take a look at DPW. So Digital Power Corporation, that's the design, manufacture, market, switching power supplies for the manufacture of computers and other electronic equipment. The company's products convert alternate current to direct current. Not sure. Digital power soars after cryptocurrency hardware update. Yeah, you stay right there. We'll come back with this. In fact, when we come back, we are going to be talking Bitcoin, folks. You stay right there.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Basil Chapman will be hosting a full-day Master Trader class Friday, December 8th from 9 a.m. until 4:30 p.m. This live 7.5-hour online class will teach you the complete concepts of Basil's Chapman Wave trading methodology, along with a variety of indicators and charting patterns that Basil uses on a daily basis, including the concept of higher peaks and lower troughs, the importance of the peak D, buy and sell modes, sustaining rallies and declines, MACD, stochastic, moving averages, on-balance volume, and much more. Everyone that attends will also receive Basil's CD book introducing the Chapman Wave methodology, a $249 value, along with 1 month of his daily trading newsletter, The Opening Call, a $128 value. Basil will be using live charts where and when possible in the webinar to show the concepts of his trading methodology, which works on all time frames. For all the details and to reserve your spot today, visit the front page of TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We're talking digital power equity, so DPW. So what they're claiming anyway, is that they so picture when you're a miner for Bitcoins, folks, it takes huge amounts of power. Huge. That's why most of these miners are in Sweden and Norway, anywhere that is really cold and hydropower. It helps dramatically bring down your cost. So what this company is saying right now is that this is the first miner AC-DC switching power supply being produced, which will be used by the Antminer S9 model by Bitman Masters and can currently be pre-ordered. Units are going to be shipped in the first quarter of 2018. Bottom line is that the stock was up 126% last week with the surge in Bitcoin. But when you take a look at this equity, don't be jumping all over this equity, by the way, folks. This equity has sales of last quarter was 3.2 million. And the reality is there's huge amounts of Bitcoin miners right now, so they haven't been buying these. That's what it comes down to. You know, we'll see whether that changes, but you wouldn't be having just 3.2 million. They did 7.6 million last year. You know, that you'd have a lot more than that. Now, we are going to go over and we're going to talk about Bitcoin Investment Trust. This equity right here, if you happen to own this equity, you got to beware and beware in a huge way, and this is why. So this equity trades, this is a unit trust equity, not an ETF, different vehicle. Bottom line, it trades at $1,824. Now, the objective of this unit trust, and what happens is that a unit trust is a closed-end fund, okay, basically. So the objective is to basically have the same net asset value as what the trust holds. Okay? So the only thing this trust holds is Bitcoins. Where the problem lies is this, is that, and this is the fund is telling us this. The fund is telling us that we are trying to hold this at the net asset value. But that being said, there is more demand on this unit investment trust than there is supply of shares outstanding. So what has happened is that this trust trades at a 95.68% premium as of the close tonight. So that means that, I'm going to bring up Bitcoin on the other side. So you're going to crack up how this works. And we've talked about this for a while, because I remember the first time that someone called about it. I says, oh man, this is crazy. And the first time, I believe that the net asset value was only about 30 or 40% higher. And it just keeps getting higher. And you know, you can make the argument of, hey, listen, if I bought it then, I made even more money, which there's no doubt. That's a fact. But now I want to show you something that is going to come due, and you're going to see it come due pretty quickly. So the Bitcoin's trading at 11,546, all-time highs today, right? So this here is saying, okay, if you buy one Bitcoin, 11,546, well, folks that think that they're buying this, they're buying Bitcoins at almost 22, they are buying Bitcoins at 22,000, owning this stock. Okay. Now, we're going to fast forward to come this Sunday, and then fast forward to the 18th of December. And what's going to happen is this, is that the CBOE Sunday night is going to start trading futures live on Bitcoin. On December 18th, the CME, which is the largest exchange in the world, is going to start trading futures. I'm just going to pull up a calendar here and look at it. Okay, so Sunday night is the 10th. The 18th, or the following Monday, that's when the CME is going to trade. Okay, so one of the best trades that have been out here for probably ever, for a long period of time, would be this. And trust me, that I'm not going to be the only one that figure this out so quick. I mean, the big money is going to be all over this. And what it is that you can hedge off against futures against this Bitcoin investment trust. And the way that you would do it is that you're going to be selling the trust and you buy Bitcoin. That's all you do. That's all you're going to do. You're going to figure out, I'm sure that there's folks right now that are going to be ripping through. In fact, I'm going to pull these balance sheets out here tonight, and this is around long enough that you can pull everything on it. So you'll know basically how many Bitcoins they have. You're going to be able to pull quite a bit on this to see exactly what's inside it, number one, because it started in 2014. So there's enough of information out there that they'll be able to pull. Then what they're going to basically do is that they're going to go and they're going to say, hey, listen, this is going to revert to the mean. The reason it would revert to the mean is because you don't have 95% premiums in unit trust, folks. Okay, you can get premiums. You know, do you remember when all the pipelines were like the big hot thing? And by the way, all those pipelines imploded and people lost a fortune. That's not too long ago either, because I remember how many calls we used to get. How many people basically were into them, and it was terrible. Those pipelines were paying, what, 7, 8, 9, some of them paid 14%. Bottom line, they imploded. Just to get back to the Bitcoin Investment Trust for a second, this correlation in between what the actual worth is inside the trust versus, and this is a simple one because that's all the trust owns. The trust owns Bitcoins. End of story. That's what they own. They have this many Bitcoins, and they're telling you you are paying a 95.6% premium. So what I expect you're going to see is that the aspect of this reverting back to the mean is going to take place. Hey, might take a year, might take 3 months, might take a couple days. I don't think we're going to see it in a couple days, but it's just trouble in paradise. That's the real bottom line. The thing that's going to get intriguing, what I don't quite understand is that why the SEC isn't all over this. You know, because if the trust objective is for the net asset value to track the Bitcoin market price, why are they having such a hard time? I'm figuring what that is that it's the way that they made the security versus, and I suspect that's probably it, because the Winklevoss twins, they got turned down by the SEC, and that actually should have got done, because the difference in a unit trust versus an ETF, you know, ETF the shares can get made and destroyed. The unit trust, I suspect, is not the same. There's so many, and guess what? There's just more people that are buying them. They're not even thinking. They're saying, that's what I want to buy. I think I'm going to buy Bitcoin, I'm going to buy the trust. And they don't realize they're paying double for the same thing.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We go over to Toll Brothers. Toll Brothers closed up 99 cents today at $50.66. And this is an all-time high out here today. Well, no, it's a year high. Let me see. I don't think it's an all-time high. This has been on quite a run, but let me just, yeah, we're approaching. Now, this is going after. This is going to be cool watching this. So the all-time high in Toll Brothers, 2005, $58.67. The low of that was 49. Now we're at 50.66, and Toll Brothers tomorrow morning before the open is going to be coming out with numbers. So we're going to be getting those housing numbers out there inside Toll Brothers tomorrow morning. We go over to AutoZone. AutoZone's up $31 today, trading at $7.09. And this baby also is coming out with numbers tomorrow morning. This is going to be cool to watch because, you know, this AutoZone, this had a nasty fall as the rest of them did in July, going down to $4.91. And guess what? It came roaring back. Right now, you're at $7.09. This is also coming out with numbers tomorrow morning. Now, the difference with how this is trading is that AutoZone is just coming up to ICE. ICE on AutoZone is 722. We're at 709. That breakdown was pretty vicious. So we'll see where that shakes out first thing in the morning. What you can expect out here overnight, folks, is you can expect that volatility to continue. The NDX, that baby not only went down, but you went down with some heavy firepower. The NDX right now just about hit the low of Friday, which is 63.46. Right now, we hit 62.46 rather. We hit is it 62.46? Yeah, 62.46. So we hit 62.50. That's the bottom line, you know. So I expect what you're going to see is you're going to see more selling. More than likely, it's just going to blow it away. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything you need is right inside you, folks. This is it. Have a blast with it. Look forward to speaking right back here tomorrow morning, 9 o'clock. Wow! Go get them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.